Hello, everyone. I'm Bella. I'm a board member of JC NYC, and I'm going to talk a little bit about the stock market and how it works. So let me move my little face icon right over here, and let's get started. So I'm going to break it down into what, where, when, why, hopefully just to make everything a little clearer, because it's definitely very confusing to learn for the first time. So, what is the stock market? Stock market is an entity where investors can buy and sell their shares of a company's stock. So, when you think of shares, you can envision units of equity ownership in a corporation. That kind of sounds intense, but what I like to think of is if a company has like a big pie and that's all of their shares, buying a share would be like buying a little piece of the pie. So that's the way that I break it down in my head. Um, and yeah, so examples of this could be over the counter markets. So that could be just like when you immediately think of selling shares or buying shares of like Apple or Tesla, that's kind of over the counter, like that. And another example would be commodities markets. Commodities are raw materials that can be used to make other goods. So think about lumber or iron, those are kinds of commodities. Another example would be like foreign exchange markets. We have a little definition on the screen, but foreign exchange is like trading one currency for another. And I'm sure that you've heard cryptocurrency being used. So, yeah, so a cryptocurrency would be another kind of market. So, to clear up a little misconception about stock markets, a stock market is actually different than the stock market index. So when someone says, "Oh, I'm checking the stock market," they're probably actually checking the stock market index. And an index is like a bunch of data and numbers about a boatload of companies or just a couple at times. Um, and these indexes allow you to like really see what's going on in an entire sector. So you could have the Dow Jones Industrial Average, which is, as you can see on the screen, made up of 30 U.S. industrial companies, or the New York Stock Exchange Composite Index, which tracks the movement of all common stocks listed on the New York Stock Exchange. Or you could have a stock market index like the S&P 500, which represents 500 of the largest companies in the U.S. economy. So now let's go into a little bit about who is behind the stock market. And this question is interesting because while a stock itself functions between a company's board of directors who agree to sell their shares of their company, and then the stock then is purchased by investors like companies or brokers. Um, the real who behind the stock market isn't really a who at all because the stock market is more of a representation of buying and selling of ownership claims of a business. So, where does this happen? Is there a big building on Wall Street where all of these exchanges occur? Kind of, but not exactly. So there's 16 stock exchanges, most commonly the New York Stock Exchange, the Shanghai Stock Exchange. But if we're thinking about where, because everything is becoming digitalized these days, another where would be on brokerage accounts. Brokerage accounts are arrangements between an investor and a brokerage firm, where the investor will give money to the firm and the firm will place trades for the investor. So if you've heard of corporations like Fidelity or Charles Schwab, those would be examples of brokerage firms. And having one of these accounts is really important if you want to be trading and investing. But of course, depending on your investing style, you could choose a brokerage firm that fits what you or what you're looking for most effectively. All right. So when does this happen? So the regular trading hours for a stock market are normally from 9:30 a.m. to 4 p.m. Before these hours, though, some brokers or companies or investors could have direct access to the market. And that's when things get really interesting. But more on that another time, I guess. So, why does this happen? The real why for mostly anything when it comes to finance is because of financial profit, some money. So, say you invest in the stock of a company and the value of the stock rises after you purchase it, then you make a profit because the stock price has increased. And at the end of the day, that's kind of the name of the game. Yeah, that's a bit on the stock market. Thank you so much. I hope you learned a little something. And yeah, I had a lot of fun talking about it, and more videos are definitely to come. All right.